Hello, friends. Today, I want to talk to you about one of my favorite companies that was just barely a $12 billion company in 2025. It's $19 billion in 2026, and most likely it's going to be $25, $26 billion in 2027. Now, I used to own it and I did good with this company, but I sold the stock around $140 thinking that the stock was overvalued and most likely it will go down. And, I got that right. The stock went down from $140 to $70. And after that, did I buy that stock? No, because capital got deployed into something else and I lost track of it. And here I am 1 year down the road. Stock is now trading at $370. This tells you what kind of genius I am. Anyhow, the reason why I'm bringing up that story is because holding on to some great companies is really, really hard, because oftentimes they are on a very high trajectory. That means the stock price is always going up. And, when stock price goes down, you assume that you have made a mistake and then you don't really buy it. For example, same thing happened with Micron multiple times. Same thing happened with AMD. But luckily, I did not sell out of those companies. But I certainly made a mistake with Celestica, and hopefully I'll get to correct it sometime this year and I'll be able to participate in it. So today I'm going to give you my thesis on Celestica, walk you through exactly why I'm bullish on it, what this company does. Now, this video is going to be long, so stick around with me, because if you don't watch it all the way till end, I promise you, you're going to miss out on a lot of information. And if I'm wrong, that means you do spend your 30, 40 minutes watching this video and you don't get the value out of this, then leave it in the comments. You say, hey, Deepak, you wasted my 40 minutes and I did not really get any value out of it. But I think if you watch it all the way till the end, you will arrive at a conclusion that it was certainly worth it. No, I don't have any fancy graphics, fancy charts or anything like that for you. It'd be straight up theory. You can listen to it while you're driving or doing your workout or something, and I think you're going to really enjoy it. Having that said, before I begin, let me remind you guys, I'm not an investment advisor, so I can't advise you on which company to buy, what company to sell, all that kind of good stuff. I'm a tax advisor, so if you need some help with your taxes, then I'm here to help you with it. Just reach out to me via taxcodeadvisors.com or come see me in person at one of my meetups. So I have one coming up on May 16th in Austin, in downtown Round Rock. So that will be a wonderful time for you to come see me. I'll share some of my insight as to what kind of companies I'm looking for and what do I want to do in 2026. All right. So let's start out with the guidance for Celestica, and then I'll dig deeper into it because I think this kind of sets up the stage. Celestica has already done $4.05 billion in Q1 of 2026. Already done. And they have guided about $4.15 billion for Q2. That means Q1 and Q2 will be approximately $8.2, $8.5 billion. That means most likely, in order for them to hit $19 billion, the second half of 2026 must generate approximately $10 to $11 billion, roughly $5.25 billion per quarter. That is a 28% jump from Q2 midpoint of $4.3 billion. So this is the single biggest execution risk in 2026 for Celestica. But since they're guiding that is where they're going to arrive, that means the second half of 2026 should be better than the first half of 2026. So that kind of sets up the stage for you why I'm super excited about Celestica right now. But before we dig deeper into and understand what's going on with it, let's start with the history of Celestica so we understand what this company does. So Celestica is a Canadian company founded in 1994, originally spun out of IBM manufacturing operations. For most of its life, it was a low-margin contract manufacturing, essentially a factory for hire with operating margins of barely 2 to 4%, typical of the electronics manufacturing services, EMS, simply means it's a company that builds products designed by someone else. You design a circuit board, Celestica builds it. For example, you're probably familiar with Foxconn. They build iPhones for Apple. So I think most people are familiar with them. The problem with the EMS is the customer owns the design, and obviously customer can always choose a different company to manufacture for him. That means there's nothing proprietary about it. Margins are razor thin. So you can't really make a whole lot of money. But in 2021, Celestica moved from being a pure assembler to an engineering core design partner. what the industry calls a hybrid EMS ODM model. ODM simply means original design manufacturer versus electronics manufacturing services EMS, meaning you don't just build what you're told, you actually co-engineer the product alongside the customer. This requires deep technical expertise, makes you much harder to replace, and justifies margins double the EMS industry on average. Today, Celestica engineers complete rack-level system for AI data centers, not just assembling parts, but designing the cooling, the cabling architecture, the networking integration, and the power distribution for the entire system. Now, they have two business segments. One is connectivity and cloud solutions, which is roughly 80% of their revenue. This is where a lot of growth comes from. So Celestica designs, engineers, and manufactures the physical hardware that powers AI data centers and cloud computing. The products in these segments are the actual physical infrastructure inside the world's largest data center buildings, the switches that route data, the servers that run AI models, and the integrated rack platforms that combines everything. So who buys it? Well, hyperscalers, meaning the very largest cloud computing companies, Google, Amazon, Microsoft, Meta. These companies are each spending anywhere between $50 to $180 billion per year building AI data centers and need a manufacturing partner who can engineer and build the physical hardware at massive scale. Celestica's top customers represent roughly 65% of their overall revenue. So the company does have a concentration risk. They also have a product called HPS, Hardware Platform Solution. So this is where Celestica has moved furthest up the stack. Basically, instead of selling individual components, one switch here, one server there, Celestica delivers a complete, integrated, pre-validated AI infrastructure platform. The networking, compute, storage, cooling, power management, all engineered together into a single deliverable. In Q1 of 2026, HPS generated $1.7 billion in revenue, 42% of Celestica's entire company revenue. HPS grew 63% year over year. So I love that. A single HPS platform sale replaces what used to be 10 separate procurement decisions. Customers get a better product, Celestica earns a larger share of each dollar spent, and because Celestica did the engineering work, it is extremely hard to replace. The second part of their business is advanced technology solutions, which is roughly 20% of their revenue. This one is more stable side. Higher complexity, lower volume manufacturing for regulated industries. Aerospace, defense, industrial automation, health tech, and capital equipment machines that builds semiconductors. Who buys them? Well, defense contractors needing avionics or missile guidance electronics, medical device companies needing certified manufacturing for imaging equipment and surgical systems, semiconductor equipment companies needing precision mechanical and electronic assemblies. Defense contracts run for 20 to 40 years. Medical device manufacturer cannot easily switch supplies. So it's more stable revenue. Now, I'm more excited about the revenue stream number one, which is selling to these hyperscalers. Now, in 2027, so you might be saying, well, 2026 looks like already good, and it's going to be even better by the end of the year. 2025 was great. What about 2027? So I want you to understand what is a switch. Now, I used to be a Cisco certified network engineer. But not anymore. Now I focus on taxes. But those of you guys who are like, well, how do I understand technology? Well, that's the reason. I used to be in that world. Inside a data center, there are thousands of servers, computers that run AI models and store data. These servers need to talk to each other constantly, sending data back and forth billions of times per second. A networking switch is the device that routes all this data between servers. Think of it like a post office that sorts and routes packages. Except the packages are chunks of digital data, and the post office handles millions of them every millisecond. Now, G stands for gigabits per second, a measure of how much data a single port-on switch can move per second. 1 gigabit equals to 1 billion bits of data, so an 800G port moves 800 billion bits of data every single second. This is the current standard. So most data centers have these switches that are 800G. Celestica is moving on. As AI models become larger and more complex, they need more servers working together simultaneously. More server means more data flowing between them. The networking bottleneck is one of the biggest constraints on how large an AI cluster can be. Moving from 800G to 1.6 terabit doubles the network capacity, allowing AI clusters to scale to twice the size without requiring twice as many switches. This is why hyperscalers are urgently upgrading and why Celestica 10 active 1.6 terabit programs entering mass production in the second half of 2026 are such a significant revenue catalyst. Now, the problem with traditional networking is that traditional switches move data as electrical signals inside the chip, then convert those signals to light at the edge of the chip for transmission through fiber optic cables. Every time you convert between electrical and optical, you lose energy and introduce delay. As data rates increase beyond 1.6 terabit, this conversion becomes significantly bottleneck and power drain. Instead of converting electrical to optical at the edge of the chip, CPO, co-packaged optics, integrates the optical components directly inside the chip packages, right next to the silicon. Data becomes much light, much sooner, travels as light much farther, and requires far less power. A CPO switch can handle the same data volumes as traditional switch while using 30 to 40% less power in a smaller physical footprint. So why is this Celestica's 2027 growth catalyst? Well, Celestica won a new CPO switch manufacturing contract with an unnamed hyperscaler in Q1 of 2026, with production expected to begin in 2027. CPO is not yet in mass production anywhere. Celestica is being awarded one of the first CPO program is meaningful competitive win, positioning it in the technology that will succeed 1.6 terabit. What about these GPUs? So you probably already know graphic processing unit, originally designed by video game graphics, but discovered to be excellent for AI calculations because they can do many calculations simultaneously. Nvidia makes the most famous GPUs used in AI training. But these days, we are hearing about TPUs. Google designed its own custom chip called Tensor Processing Unit, specifically optimized for the type of calculation required to run Google AI models. TPUs are faster and more efficient than GPUs for Google's specific workload, but are not sold commercially. Google uses them exclusively for its own manufacturing. Now, why I'm telling you this story? Well, Celestica is Google's preferred manufacturing partner for TPU infrastructure, not just the TPU chip itself, which Google designs internally, but the complete server platforms, networking systems, rack scale infrastructure that surrounds and connect those TPUs. This is one of the Celestica's most strategically important relationship. So if you're bullish on Google, which I think many of you guys are, then most likely you will probably find Celestica to be a nice add-on to your investments. What about AMD? As I told you guys earlier, I'm holding on to AMD since AMD was 100, and I'm very bullish on AMD, and I do think the company can double from here. Well, that's a topic for another video. Maybe I'll share it one of these days for you. But let me tell you this story. On March 16, 2026, so it wasn't really that long ago, just last month, Celestica and AMD, Advanced Micro Devices, a US semiconductor company that makes CPUs and GPUs and starting to compete with Nvidia and Intel, announced a joint collaboration called Helios. Helios is a rack system, AI platform, entire cabinet of AI computing hardware designed as single integrated system. Celestica leads the engineering, design, and manufacturing of the networking switches inside Helios. These switches use AMD's networking silicon and ultra-accelerated link over Ethernet protocol, a next-generation communication standard that allows AMD's Instinct MI450 series GPU chips to talk to each other at extremely high speed within a data center cluster. Now, why is it strategically important? Well, the entire AI hardware world currently runs predominantly on Nvidia You know that already. Many of you guys are big investors in Nvidia. AMD is fighting to gain market share with its competing GPU product line. By partnering with AMD on Helios, Celestica is positioning itself in the AMD AI ecosystem. If even 20 to 30% of AI training shifts from Nvidia to AMD, Celestica will benefit directly. And it gives Celestica an insurance policy against Nvidia hardware being displaced. So who plays? Who are the customers for Celestica? Who pays them? Well, these are your hyperscalers: Alphabet, Amazon, Microsoft Azure, Meta platforms, Bell Canada. In matter of fact, let me talk about Bell Canada. So Canada's largest telecommunication company commissioned Celestica to build a Canadian sovereign AI stack, a domestically built, domestically operated AI computing infrastructure that does not depend on US-controlled hyperscalers. This is Celestica's first major sovereign AI win, an entirely new category where customers that represent a strategic diversification away from US hyperscaler. So think of it like, if you're Japan, India, Germany, why would you want Google to own that infrastructure? Wouldn't you want to own your own infrastructure and you have your own local AI companies to provide the AI services? I think so. Another thing we should also talk about is, who does Celestica buy from? Because we want to understand the entire ecosystem, right? Well, the key supplier for Celestica is AMD. I already told you that because of that partnership. But the other two companies that you want to really pay attention to is Broadcom and Marvell. So you already see what Broadcom is doing, what Marvell is doing. So Broadcom makes the networking switch chips that Celestica puts inside its switches. Specifically, Celestica DS6000 series 1.6 terabit switches use Broadcom Tomahawk 6 chips, the most advanced data center networking silicon currently available. Broadcom also make custom AI chips for Google and Meta, so this relationship is symbiotic. When Celestica wins more switch programs, Broadcom sell more chips. When Broadcom launches a new generational chip, Celestica builds the switches around it. So I would like to own Broadcom. I would like to own Celestica. I would like to own AMD. But I mentioned one more company, Marvell. Marvell makes high-speed networking chips and custom silicon used in some of the Celestica's products. Like Broadcom, Marvell is a chip designer. Fabless, meaning it designs chips but doesn't manufacture them. That benefits when Celestica wins more networking program. So it's a good ecosystem. You can see just by understanding this one company, how much benefit you can gain from all the other companies that are associated with this one player. Now, you might be saying, well, then what about Nvidia? Should we forget about Nvidia? Well, Nvidia H100 and H200 GPU chips are the dominant AI training hardware that most of Celestica's hyperscaler customers use inside their data centers. Celestica builds the server platforms and networking infrastructure that surround and connect these Nvidia chips. Nvidia benefits when Celestica wins more programs. More infrastructure means more demand for Nvidia GPUs. However, Nvidia also makes its own networking switches, if you don't know, known as Spectrum X, which can compete with Celestica's switch product line directly. What are some of the competitors for Celestica? Arista Network is one of the direct competitors out there. Nvidia, like I already said it, there's a company called Jabil, Jabil. JBL is the ticker symbol. And obviously Foxconn, you probably already know them because they're the one who makes those Apple iPhones. Then there's a Taiwan company called Quanta. So you might want to take a look at that as well. So I think you're starting to get a picture. Why would I want to be bullish on Celestica? But let's talk about, when would I like to buy this stock? Because these stocks are typically at least fairly valued and oftentimes overvalued because of everything that is going on in the semiconductor, especially in last couple of weeks. These stocks has come up a lot. Celestica fell almost 10% on strong result. Historically, post-earnings sell-off in Celestica have recovered within 4 to 8 weeks as market digests the raised guidance. Stock fell from, I think, 445 to almost 350. So if the business fundamentals remain intact, which it looks like they are, this dip is the best entry point since March 2026. But, even back then, it was only $305. So currently, it's a good entry point. However, What I like to do is use the moving day average because it smooths out the daily volatility, show the overall trend. The 200-day moving average, which is currently sitting at around $300, is a good price tag. So just in case we get any kind of pullback, I would like to buy the stock around $300. Now, why I'm sharing this video with you today? Well, every time Google, Microsoft, Amazon, or Meta announces increased data center spending, Celestica stock tend to rally because investors immediately connect the capital expenditure dollar to Celestica's order book. These announcements happen throughout the year on hyperscaler earnings. So any positive data center spending commentary is near-term catalyst for Celestica. Now, what about when would I want to sell the stock? Well, this is the most consistent and actionable patterns Celestica has shown. The stock ran almost 51% in months before Q1 2026 earnings, from $293 to almost $400 some dollars. At that point, even record results weren't enough to push it higher. So if you see Celestica up 40% from its recent low in the month, heading into the earnings report, consider trimming. Well, that is exactly what happened just a couple of days ago. The single fastest way Celestica reprices lower is if Google, Microsoft, or Amazon signals a slowdown in data center spending. Watch out for hyperscaler earnings call carefully. Any language suggesting capex is being reduced, programs are being delayed, or AI built out is pausing is an immediate sell signal for Celestica. Even a softening of tone from record capex to disciplined capex could trigger 15 to 20% drop within hours or certainly within days. Now, Celestica was trading approximately 55x forward gap earnings, a level that requires essentially zero execution risk and no margin compression. At these levels, the stock is priced for perfection, and any miss is punished severely. Practical rule is if Celestica ever trades above 50x forward gap EPS, begin trimming. But we are not there yet. I think right now it's trading maybe about 25 forward earnings. So we are okay. When DeepSeek released its highly efficient AI model in early 2025, data center stocks fell sharply because investors feared AI could be done with much less hardware. If another breakthrough dramatically reduces the compute required for AI, meaning hyperscalers need fewer servers and switches, Celestica's growth trajectory would be immediately threatened. This is a low probability but high-risk impact that warrants having some position sizing discipline rather than being 100% concentrated. So am I going to make Celestica 10, 20% of my portfolio? Of course not. And I'm going to buy it slowly. Is it a bad day to buy today? No. Maybe I can buy a few stocks here. If it drops to 340, maybe I buy some 4. If it drops to 300, I'll buy more. If it drops below 300, I would love to, increase my position to 3-4% of my portfolio. So that would be my strategy if I want to build my position in Celestica. Another key thing to remember is right now people are loving what's happening with semiconductor, what's happening with data centers, what's happening with AI. But as soon as the earnings season is over, people are going to start focusing on fundamentals. People will start talking about debt. People will start talking about capex, all those things. So one of the problems I have with Celestica is that their margins are very slim, only, barely 8%. And they're taking on all this debt to build. I think their capex spending is roughly $1 billion a year, which most likely is going to increase to $1.5 billion next year. So that is one aspect. Celestica will have these corrections along the way. 15 to 20% correction, multiple times a year is not common. So I don't have to rush into this stock. I can wait for that correction and jump in. But at the same time, do understand what I said about what kind of numbers you can expect to see from Celestica by the end of the year. So it's you have to kind of balance that stuff out. One of the problem people have in investing is they think they will never get a second opportunity. But that's not really true. Market is kind enough to give us multiple opportunities all the time. We just need to be prepared to take advantage of them. Oftentimes, we are not. Why? Because we don't have liquidity. So if you want to get into Celestica and you think the price is too high, you want to wait for a little bit of a correction, maybe the stock can pull down to 300 or something, then you need to put that money aside. Let's say if you want to buy 10, 20, 30, 50, 100 stocks, whatever that number is, put that aside and wait for that pullback. Or you can do the options play as well. Sometimes that works out in your favor as well. But over the long run, I think this story is just getting started. I think all the other countries will be jumping in to get a piece of these data centers. And obviously, they want a player that can work with multiple players and put this whole story together. So I hope you find a lot of value in this video. I think you got a lot of good information. And if you did, then please do leave your comments so that way I can talk about other companies, share those information with you as well. Celestica has a proven record of beating the estimates for many, many months now, consistently. And I expect them to do the same for many more months. So I'm very bullish on Celestica, but I'm going to be very careful because of two reasons. Number one, capex spending. Once that is done, I think Celestica profits will boom. But until then, we still have that risk because those conversations around it, I think people don't remember that right now. It wasn't too long ago that people were worried about the private credit and the debt, right? So right now, people are really more focused on other things. But as a long-term investor, we need to understand nobody spends $1 billion or $2 billion building these factories because they think that demand is only there for a couple of years. They are building these factories because they're seeing this demand for many, many years. These data centers will be built all around the world, right? This is a new railroad. It's the new internet. It's being built. But instead of owning data center, these are much better plays because these people make money every single data center. And I get to learn so much more about other companies as well. Like the moment Broadcom earnings come out, I know how Celestica going to look like. Marvell does well, I know Celestica going to do well, and so forth. So there's like a lot of this relationship going on that I can use to make a better judgment call. So anyhow, I hope you found this information helpful. If you do, then please don't forget to comment in WhatsApp group or in YouTube. If you have a question for me, comment, share it with your friends, family members, subscribe to the channel, all kind of good stuff. And let me know what company I should talk about next time. Till then, goodbye. Thank you.